Good evening, everyone. This is Srikanth Rajan, and welcome back to the Market Pulse, where we discuss what's happening across the investment segment across the world and also what should we do with our investments. Of course, did see the title of this video. Is the Indian stock market going to hit another all time high this week? Well, we will be discussing that in a while, but before that, let us talk about what happened last week. So we did see a general weakness in Indian stock market the previous week, and we could see the markets actually closing much lower. It in fact broke 22,000 support level and then did close lower, even lower than 21,900. But from there, the markets have seen a big reversal, and the markets are now again about 22,500. So that is what happened this last 1 week. It was a completely, I would say, a bullish week because the markets have consistently performed and gone up higher. But then what led to this buying is something that we need to look at. Now, one thing that we always discussed earlier also is the kind of power that the mutual funds in India have at this point of time because of the huge SIP book that it is sitting on right now, and the huge fund flow that's coming into the market via the mutual funds. And these mutual funds have been doing a great job of supporting the market by buying at lower levels. So at this point of time, 22,000 level at the Nifty has been considered as a great support, and that has not been allowed to break till date. But then one thing that we've discussed earlier is staying in place. That is nothing but we had discussed about a sideways market. So of course the markets are really volatile, big movements in the market, but then they are still moving sideways. So at this point of time, the question, will the Indian stock market hit another all-time high, actually does not have any relevance. See, all-time high is just a number. Now, if it just goes 1 point above the previous high, it is again an all-time high. But then why I put this across is this is something I read in one of the media news. Will the Indian stock market hit another all-time high this week? Now, why should we be worried whether Indian stock market hits all-time high or not? But only thing that we need to know is that consistent investment is the key to making money in the market. But then it is a pity when people actually try to time the market. So that is something that you can never do because nobody in the world knows where the market is going to move tomorrow, next week, next month. But only thing that we know, over a period of time, the markets will definitely grow. So don't fall for all these one liners, but I would say rather just be consistently investing for a long term investment, and that should take care of things. Now, coming to next important thing. Now, what should we do with our investments? That's a very good question. Now, if you're going for a lump sum investment, not a great time for lump sum investment. I would always prefer something called as a STP, systematic transfer plan, which we can help you with. That would help you invest your money over a period of 2-3 months into the market. That would actually take care of the highs and lows in the market. But what is happening at this point of time, as the market is actually expecting the election results, in fact, the election itself has been moving over a longer phase, and the results are expected to come by 4th of June. But till then, the markets are just running behind rumors and news. So there is, some news that probably that BJP may not get 400 seats. Then market moves down. Then there is another news that BJP is getting stronger. So it's not about BJP or Congress, but what important is, does India qualify for a strong government? And that is the big question. So people are still looking out for answers, and it is definitely not going to be clear until the 4th of June. But till then, speculations are actually driving the markets up and down. So at this point of time, the results can actually trigger the market to any side, to go up or down. But then the most important thing is to stay invested with more than at least 50% of your capital, so that you can get benefit if it moves up, and if it is less, if it goes down, you still have 50% fund that is available to deploy in the market. At least 50%, because I did hear a few people actually trying to reduce their equity portion. That's definitely not going to work. Never try to time the market. It is just the right asset allocation that always works. At this point of time, gold again has been hitting all-time highs. In fact, there was some important data that came in last week at the US. The inflation data has actually come better, and that has led US to actually, 52-week high. Dow has crossed 40,000, so that is at 52-week high already. So at this point of time, the markets are seeing the global positivity, but only holding back because of the Indian markets. I mean, especially the election results. So even one very important thing at this point of time, the challenge that we've seen reducing is the FIA selling. So FIAs have been selling big numbers in the previous week. We've seen they've been selling for 7,000 crores, 6,000 crores. That has kind of come down in the last 1 week. Now that also has led to people feeling that the fall is now limited at this point of time. So that means markets can see some, positivity at this point of time. But however, we should always look at long term as an investor, and long term, definitely the market continues to be bullish. I would say the kind of prospects that India has to grow is something amazing. So you should actually continue to invest if you are looking at a long term return. That is, what is long term? At least 5 years plus. So if you're looking for investment for more than 5 years, definitely go ahead with the market. And one very important thing is, unless you have a commitment that within 5 years on this specific date you want the money, I would say you should put into equity. That would help you grow your money faster. That's very important. But then, like I've told you, you need a good amount of investment into real estate or gold or other asset classes like bonds also. But then it all means that you have to just diversify slightly based on your risk analysis, your risk taking ability and the market conditions. So at this point of time, I would say you should also be looking at good investments into real estate. But then that is something very important. It's not going to be easy, because diversifying into real estate is a very difficult job, because the fund that goes into investment of a real estate is actually higher. And diversifying cannot be easy unless you have at least 10 crores with you, where you are able to diversify your funds like into multiple places, at least in a city like Bangalore. But then second thing is the legality involved in buying a real estate property. So talking about all this is where I would like to introduce a new fund which is brought in by Edelweiss. And this new fund focuses on commercial real estate. So commercial real estate is one thing which you can definitely get better returns compared to residential real estate or apartments. So better than that is definitely commercial real estate. But then again, the headache of finding the right property and buying them and looking at the legality around it, and tomorrow if some legal hassle comes in, your fund gets stuck with all these fears, people cannot actually go ahead and invest into it. So this is something that Edelweiss has solved. And what they've done is, in this particular fund, you get rental yield plus the appreciation on the property, and you are actually going to become a physical property owner. So that is something that they're doing. In fact, in this fund, what is happening at this point of time is they've already bought a building, a complete commercial building in the Manida Tech Park in Bangalore for almost 1,500 crores, and you become a co-owner in one of those buildings. So what happens is, these funds, they take care of leasing your building to a commercial business, which will take it on rent, and they will pay the rent. And they will, so their responsibility is to check the legality. Their responsibility is to ensure the safety of the investment. Their responsibility is also to get the right tenant for the building. Their responsibility is also to get the funds flow going, cash flow, so that you get good returns on the market. And the best part is, this fund, which has been there for multiple years, has been giving a return of almost 20% per annum. So that way, this is a great fund to be investing in. The minimum investment starts at just 1 crore. Yes. So you can become a co-owner for this physical property with just 1 crore investment. And of course, you don't have to pay the entire 1 crore in one shot. You can start off with as low as 30 lakhs for now. And then over a period of 1 year, you have to make the balance payment. And the best part is, this also has funding option. So if you want to use funding, once you have attained a certain level, you also get loan similar to buying a house. And the best part is, this fund is co-owned by multiple people, so hence the risk is divided among multiple people. But what is the risk when we talk about a commercial building? The risk is, one, that the commercial building has less number of tenants. Well, these people are so much experienced in this that they have ready-made tenants. In fact, they buy a building only if it is 90% plus occupied. So that is the first risk that is taken care of. The second risk is the legality. They've got an amazing team of advocates which ensure that every legal hassle has been taken care of, so you get a more safe property. And this fund being a big in size, they are just starting now, and they are planning to acquire much more buildings across the country. commercial buildings, and the best part is they buy these buildings and then increase the rating of these buildings by adding some value addition, and then this helps increase the rental yield from the building and also appreciation on the building. So overall, the returns you can see, including the rental yield and the appreciation and capital gains, together can give you a return of almost 20% with zero hassle of owning a real estate. So this is a great fund to start with if you're looking at a real estate investment than going for a residential home or anything else, because first thing that you need to understand, none of the residential investment can give you more than 5 to 6% return in a developed area. So like city of Bangalore or Delhi, where it is, if you buy a property in the developed area, it's going to take a lot of time. But if you buy a property in the underdeveloped area, probably that has more chances of getting you more appreciation. But then what if that area never develops? It's not easy to control all these things. So that's exactly why these kind of funds actually gives you much safer way to invest in real estate. And the best part is, any legal hassle, everything is all responsibility of this company. And Edelweiss, of course, is one of the listed large, one of the biggest financial management company in the country of India, and of course it's listed in the Indian stock market as well. So it is a company that you can trust with confidence. Well, you need to make a lot of information and decision making before investing into it. And for all the support you need, you can just connect with us on our website mpiinvest.com and schedule an appointment with me. We will connect you to the right people, right team to understand everything about this fund and invest into this fund easily. So that's something that we can help you with. So do connect with us and your friends, those who are looking to invest in real estate in a safer manner with better returns. Of course, almost 20% returns on a real estate is not something that everybody can achieve. So, sorry. So, of course, seeing a background, you understood I'm not at my office today. Well, I'm not there. So, this is a temporary makeshift office set up for video. However, we try to improve the quality of video and sound compared to the previous time. I hope this is better. However, things should be better from next week. So, of course, once in a while when I'm traveling, the background would be different. But then, of course, the content that I have to give you has to go on. So with that, coming to next week, the markets, like I've told you, has taken a support at 22,000 and started moving up in the equity market. So Nifty could be seeing a higher movement at this point of time. And I am expecting, however, the markets to be consolidating at this level. But then global positivity can also drive it higher. Now, very important thing about this upcoming week, most important results have completed, but then very important part of those in the upcoming week is that tomorrow is a holiday because of Maharashtra elections, and this holiday is only specific to India, not global markets. So global markets will be open tomorrow, and Indian stock market will be closed. So based on how the global markets move tomorrow, we might see a gap up or a gap down on Tuesday. So that's something that you could be watching out for. Apart from that, it's a shorter week. So the expiry Tuesday, Wednesday, Thursday, just 3 days for expiry of this week. So markets will continue to be volatile. Nothing to be said about that. But then, of course, the next week is going to be the last week of expiry, monthly expiry, and that could trigger multiple, big. In fact, of course, off late the volatility is too high, and that kills a lot of traders, especially the option sellers. So be careful when you trade at this point of time. I would say even if it's okay if you don't trade at all at this point of time. So apart from that, nothing else for this week. This week is looking as calm as ever as far as news front. But then markets you can never predict, but only anticipate the markets. So like I always say, just stay invested, continue with your investments in the equity. They are definitely go ahead. But if you look at the real estate fund, which I told you, definitely that's not something that everybody should get into. It is only for people who have already have good investments in equity and other portfolios. That will ensure that only a small, I would say probably not more than 15 to 20% of your entire portfolio. Maximum 25% is what I would recommend this portfolio to. Otherwise, don't go ahead until your equity portion is completely done. So that's it for now. This is Srikanth Rajan signing off. If you have any questions related to your investments, do come back to me. You can come out in the comment section. I would be answering it in the next week's podcast. So till then, this is Srikanth Rajan signing off. Wishing you all a great week ahead. Goodbye. See you next Sunday with more details.